Based on the historical data and forecast, Bitcoin has shown volatility with a recent pullback. The support price is consistently at $108,300, and the resistance is around $117,200. The RSI has been fluctuating, dipping below 50 and approaching the oversold level of 20, indicating potential buying opportunities. The Bollinger Bands show periods of contraction and expansion, suggesting potential breakout or reversal points. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands for optimal returns. My strategy involves a long position when the RSI falls below 40, indicating an oversold condition. Specifically, when the RSI hits 40.5 on August 6, 2025, enter a long position at $114,000. Place a stop-loss order at $108,300, just below the established support level, to limit potential losses. The initial target price is set at $116,800, aligning with the forecast price on August 13, 2025, and the upper Bollinger Band. If the price reaches this target, consider a partial profit booking and a trailing stop-loss to capture further gains. If the price continues to rise beyond $116,800, adjust the target price to $117,200, the resistance level, for maximum profit potential. This strategy combines the momentum indication from RSI with the volatility signals from Bollinger Bands, providing a balanced approach to capitalize on potential upward price movements while mitigating risk. Based on the historical data and forecast, Ethereum demonstrates a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuates above 50, indicating a generally bullish sentiment, but recently dipped below 60, suggesting potential for a short-term correction. The Bollinger Bands show the price recently touched the upper band, hinting at a possible pullback. Considering these factors, I recommend a strategy combining elements of trend following and mean reversion. We will initiate a long position at $3,750, capitalizing on the bullish trend. A stop-loss will be set at $3,430 to protect against a significant downturn, and the initial target price will be $3,950, aligning with the forecast high and upper Bollinger Band. To refine this strategy, we'll incorporate RSI signals. If the RSI falls below 40, we will consider covering the position and waiting for a more favorable entry point. Conversely, if the RSI reaches 80, we will consider taking partial profits and adjusting the stop-loss higher. The overall portfolio will allocate 60% to this long position, 20% to a cash reserve, and 20% to a short position initiated when the RSI exceeds 80, with a target price of $3,710 and a stop-loss at $3,890. This diversified approach aims to maximize returns while mitigating risk, leveraging both the upward trend and potential short-term corrections in Ethereum. Based on the historical data and forecast, XRP has shown volatility, with a recent dip towards the support level of $2.27 and fluctuating RSI readings. The RSI has been consistently below 80, indicating the asset is not consistently overbought. However, the recent dip has brought the RSI below 50, suggesting a potential oversold condition. Considering this, I recommend a long position entry at $2.97, coinciding with a bounce from the recent low and a potential reversal signal. A stop-loss should be placed at $2.79, just below the recent swing low, to limit potential losses. The initial target price is set at $3.13, aligning with the upper Bollinger Band and a conservative profit target. To refine this strategy, we'll incorporate Bollinger Bands and RSI. When the price touches the lower Bollinger Band and the RSI dips below 40, it signals a potential buying opportunity. Entry price at $2.96, stop-loss at $2.74, and target price at $3.13. The combined strategy will provide a more robust approach to capitalize on XRP's potential for recovery and upward movement. The portfolio will prioritize entries when both indicators align, maximizing the probability of successful trades. Based on the historical data and forecast, BNB shows a fluctuating trend with periods of consolidation and upward movement. The RSI consistently enters overbought territory, frequently exceeding 80, indicating potential pullback opportunities. The Bollinger Bands show that the price has been fluctuating around the middle band, with occasional touches of the upper and lower bands. Given the current RSI of 55.3 on August 6, 2025, and the forecast predicting a price of $770 on August 7, 2025, I recommend a long position. Enter at $770, with a stop loss set at $757, just below the support level. A first target price should be $783, aligning with the recent resistance. If the price breaks through the resistance, a second target price of $786 can be considered, based on the forecast for August 11, 2025. To refine this strategy, I'll integrate the Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity, confirming the oversold condition. Conversely, when the price approaches the upper band, it suggests a potential selling point. Therefore, a combined strategy is optimal. Enter long at $770, with a stop loss at $757. The initial target is $783, and a secondary target is $786. If the price retraces to the lower Bollinger Band, consider adding to the position at $765, with a stop loss adjusted to $757 and maintaining the $786 target. This layered approach maximizes potential gains while mitigating risk. Based on the historical data and forecast, Solana has shown a downtrend from July 24, 2025, to August 6, 2025, with the RSI consistently below 70, indicating a weakening upward momentum. The forecast for the next week projects a continuation of this downward trend, with prices ranging from $167 to $168. Considering the support price of $164 and the RSI currently at 47.9, we can implement a short selling strategy. We will enter a short position at $168, placing a stop-loss order at $172 to protect against a potential reversal. Our target price will be $158, aiming for a profit of $10 per Solana. To refine the strategy, we will incorporate the Bollinger Bands. The price is currently near the middle band, and the forecast suggests it will remain within the bands. We will use the RSI as our primary signal, entering short when the price is above the upper Bollinger Band and the RSI is above 70, and exiting when the price touches the lower Bollinger Band and the RSI falls below 30. Combining these indicators, our portfolio will prioritize RSI signals for entry and exit, with the Bollinger Bands providing additional confirmation. This approach aims to maximize returns while mitigating risk, capitalizing on the anticipated downtrend in Solana. Based on the historical data and forecast, TRON shows a generally upward trend, with recent fluctuations. The RSI values have been oscillating between 59.0 and 76.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been tightening recently, suggesting a potential breakout. Considering these factors, I propose a long position strategy. We will enter a long position at $0.336, coinciding with the first day of the forecast period. A stop loss will be set at $0.326, just below the support price, to mitigate potential losses if the price reverses. The initial target price will be $0.348, aligning with the upper Bollinger Band and the forecast peak. To refine this strategy, we will incorporate a dynamic target adjustment based on the RSI. If the price reaches $0.348 and the RSI exceeds 80, we will move the stop loss to $0.344 and set a new target price at $0.35. This allows us to capture further gains while protecting profits. If the price fails to reach $0.348 within 3 days, we will reevaluate the position and consider exiting with a small profit or adjusting the strategy based on updated market conditions. This portfolio combines technical indicators and forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, Dogecoin demonstrates a downtrend with increased volatility. The RSI consistently dips below 50, indicating a weakening momentum, and briefly enters oversold territory around 38.9 on August 1, 2025. The Bollinger Bands show the price fluctuating within a wider range, suggesting increased uncertainty. Given the recent price action and the forecast predicting prices around $0.206 to $0.208, I recommend a cautious short selling strategy. Entry price should be $0.206, with a stop loss set at $0.212 to protect against a potential upward reversal. The initial target price is $0.192, aligning with the established support level. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI falls below 20, oversold, consider a long position, with an entry price of $0.192. The stop loss should be set at $0.201, and the target price at $0.21, capitalizing on a potential bounce. Conversely, when the RSI exceeds 80, overbought, a short position is warranted. Entry price should be $0.211, with a stop loss at $0.209, and a target price of $0.192. Combining these three strategies, the most efficient portfolio will be a short position with an entry price of $0.206, a stop loss of $0.212, and a target price of $0.192. Based on the historical data and forecast, Cardano shows a downtrend with recent price fluctuations. The RSI consistently hovers around the 40 to 60 range, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a slight upward movement in the short term, with prices fluctuating between $0.75 and $0.764. Considering the support price of $0.739 and the recent price action, I recommend a cautious long position strategy. Entry price should be set at $0.75, with a stop-loss order at $0.739 to mitigate potential losses if the downtrend continues. The target price for this trade is $0.764, aiming to capitalize on the predicted short-term upward movement. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been fluctuating within the bands, suggesting moderate volatility. Given the RSI is not in oversold territory, we won't trigger a buy based on that indicator. However, if the price approaches the lower Bollinger Band, around $0.676, and shows signs of bouncing back, a long entry at $0.7 with a stop loss at $0.681 and a target price of $0.739 can be considered. This strategy combines the forecast data's slight upward trend with the Bollinger Band's volatility indicator for a more dynamic approach. This portfolio prioritizes managing risk while seeking moderate gains. Based on the historical data and forecast, Stellar shows a slight upward trend, though it has experienced considerable volatility. The RSI consistently fluctuates, with values ranging from 43.2 to 62.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands demonstrate the price's recent movement within a narrowing range, suggesting decreasing volatility. Given the current forecast prices hovering around 0.42 to 0.44, and the support price fixed at 0.26, I propose a strategy focused on capitalizing on potential upward momentum while mitigating risk. My recommended strategy is a combined approach using RSI and Bollinger Bands. Initially, I suggest entering a long position at $0.421 when the price dips near the lower Bollinger Band and the RSI is below 50. Set a stop loss at $0.384, slightly below the recent low and the bottom of the Bollinger Band to protect against a sudden downturn. The initial target price should be $0.436, aligning with the forecast price and the upper Bollinger Band. If the price reaches this target, consider a partial profit taking and a trailing stop loss at $0.42 to secure gains and allow for further upward movement. This strategy balances the potential for high returns with a conservative risk management approach, suitable for the current market conditions. Based on the historical data and forecast, Sui shows a slightly downward trend recently, with prices fluctuating within the range of $3.34 to $4.36. The RSI is generally below 69.5, indicating that the asset is not significantly overbought. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the forecast prices hovering around $3.5 to $3.6, I recommend a moderately bullish strategy. The support price of $2.89 provides a safety net, while the resistance of $3.58 presents a potential profit target. I propose a strategy that combines RSI and Bollinger Band signals. We will enter a long position when the price touches the lower Bollinger Band and the RSI is below 45. For example, if the price drops to $3.23 and the RSI is 44.8, enter a long position at $3.23. Set a stop-loss order at $2.99, just below the support level of $2.89. The initial target price is $3.58, aligning with the resistance level. If the price reaches $3.58, consider taking half of the position and moving the stop-loss to the entry price of $3.23 to protect profits. If the price continues to rise, a second target price could be set at $3.8. This combined strategy aims to capitalize on short-term bounces while mitigating risk with well-defined stop-loss levels. Based on the historical data and forecast, Dogwifhat demonstrates a downtrend with increased volatility. The RSI consistently hovers below 50, indicating a bearish momentum. The forecast for the next week projects a continuation of this downward trend, with prices fluctuating around $0.859 to $0.888. The support price is consistently at $0.871, and the resistance is at $1.08. Considering these factors, I recommend a short selling strategy. The entry price will be $0.903, with a stop-loss placed at $0.903 above the entry price to mitigate potential losses if the price unexpectedly reverses. The target price will be $0.858, aiming to capitalize on the anticipated downward movement. To refine the strategy, we will incorporate the Bollinger Bands. The price consistently tests the lower band, suggesting that the current price is relatively low. However, given the bearish trend and the forecast, I will prioritize the short selling strategy. The portfolio will be 60% short selling, 30% waiting for the RSI to reach an oversold level below 20, and 10% waiting for the price to touch the upper Bollinger Band. This diversified approach balances risk and potential reward, capitalizing on the prevailing downtrend while remaining flexible to adapt to market fluctuations. The strategy's success depends on the price's ability to break through the support level of $0.871. Based on the historical data and forecast, Ethena shows a generally upward trend with periods of volatility. The RSI consistently fluctuates above 50, indicating bullish momentum, with several days exceeding 70, suggesting overbought conditions. The Bollinger Bands also confirm this, with prices frequently touching or crossing the upper band, implying upward pressure. Considering the forecast for August 7th to 13th, with prices predicted to rise to $0.69, I recommend a long position strategy. We will initiate a long position at $0.619, placing a stop-loss order at $0.571 to limit potential losses if the price reverses. The target price for this trade will be $0.69, aiming to capitalize on the anticipated upward movement. To refine this strategy, we will incorporate RSI signals. When the RSI dips below 30, indicating an oversold condition, we will consider entering a long position. Conversely, when the RSI exceeds 70, suggesting an overbought condition, we will consider exiting our long position or tightening our stop-loss. The Bollinger Bands will serve as dynamic support and resistance levels. If the price breaks below the lower band, it may signal a potential trend reversal, prompting us to exit the position. The combined approach of the upward trend, forecast data, RSI signals, and Bollinger Bands should yield a high-return investment strategy while effectively managing risk. Based on the historical data and forecast, Virtual's protocol is currently in a downtrend, with the price fluctuating between a support of $1.15 and a resistance of $1.43. The RSI indicates oversold conditions, particularly on August 6, 2025, with a reading of 36.9. The Bollinger Bands show that the price has been consistently trading near the lower band, suggesting further potential for downside movement. Considering these factors, I recommend a short selling strategy. Enter a short position at $1.23, with a stop-loss placed at $1.28, just above the recent high of the Bollinger Bands. The initial target price is $1.15, the established support level. To capitalize on the downtrend, I propose a second strategy that is more aggressive. Enter a short position at $1.18 on August 7, 2025, with a tight stop loss at $1.21. The target price for this trade should be $1.12, aligning with the forecast for August 13, 2025. This strategy is riskier due to the shorter timeframe and tighter stop loss, but it offers the potential for quicker profits if the downward momentum continues. Combining both strategies, with a higher weight on the first, more conservative approach, will provide a balanced portfolio that aims to capture profits from the current downtrend while mitigating risk. Based on the historical data and forecast, Ether.fi has shown volatility with a clear support level at $1.01. The RSI indicator has fluctuated between 37.1 and 57.8, indicating periods of oversold and overbought conditions. The Bollinger Bands have widened, suggesting increased price volatility. Given the recent downtrend and the forecast predicting a price around $1.03 to $1.04, I recommend a long position strategy. Entry price should be $1.02, with a stop loss set at $0.99 to protect against a potential downside breakout. The initial target price is $1.06, aligning with the recent resistance level. To refine this strategy, we can incorporate the RSI and Bollinger Bands. When the price touches the support level of $1.01 and the RSI is below 40, enter a long position at $1.01. Set a stop loss at $0.98 and a target price at $1.05. If the price reaches the upper Bollinger Band, consider taking partial profits and adjusting the stop loss higher to protect gains. This combined strategy balances risk and reward, capitalizing on potential price bounces while mitigating potential losses. Based on the historical data and forecast, PancakeSwap shows a slightly upward trend with periods of consolidation. The RSI fluctuates between 44.7 and 76.3, indicating both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility followed by a potential breakout. Considering the support price of $2.34 and the resistance price of $2.77, I recommend a strategy that combines RSI and Bollinger Bands for optimal returns. We will implement a long position when the RSI falls below 45 and the price touches the lower Bollinger Band, indicating an oversold condition. The entry price for our long position will be $2.64, coinciding with the forecast price and the lower Bollinger Band. A stop loss will be placed just below the support level at $2.34, setting it at $2.30 to mitigate potential losses. The initial target price will be near the resistance level at $2.77, with a secondary target at $2.80, based on the historical upper Bollinger Band. This strategy aims to capitalize on the anticipated upward trend while managing risk effectively. This portfolio is the most efficient strategy because it combines the best of all three strategies. Based on the historical data and forecast, POL-Xmatic shows a downtrend followed by a slight recovery. The RSI consistently dipped below 50, indicating weakening momentum, and recently climbed above 50 but remains below 80, suggesting the asset is not yet overbought. The Bollinger Bands show that the price has been oscillating within a range, with the lower band nearing the support level of $0.194. The forecast indicates a continued slight upward movement, but it remains within a narrow range. Therefore, a cautious, momentum-based strategy is recommended. I suggest a long position strategy with an entry price of $0.214. Given the recent RSI readings and the proximity to the support level, a stop loss should be placed slightly below the support at $0.194, around $0.192. For the target price, we will aim for a modest gain, anticipating a short-term upward movement based on the forecast, setting the target at $0.228. This strategy combines the upward forecast with the RSI and Bollinger Bands readings, aiming for a balance between potential gains and risk mitigation. The strategy is designed to capitalize on the potential short-term upward movement while protecting against a potential breakdown below the support level. Based on the historical data and forecast, Pudgy Penguin shows a fluctuating trend with recent consolidation near the support level of $0.0333. The RSI has been oscillating around the 50 to 60 range, indicating neither strong bullish nor bearish momentum. However, the forecast predicts a slight upward trend, with prices expected to hover between $0.0378 and $0.0404. Considering the Bollinger Bands, the price has been nearing the lower band recently, suggesting a potential oversold condition. Therefore, I recommend a long position with an entry price of $0.0356. Place a stop-loss order at $0.0333, just below the support level, to protect against potential downside risks. Set a target price of $0.0401, aligning with the upper end of the forecast range and just above the center of the Bollinger Bands. To enhance the strategy, I will incorporate an RSI-based rule. If the RSI drops below 20, indicating a strong oversold condition, we will enter a long position at $0.0333, with a stop-loss at $0.032 and a target price of $0.038. Conversely, if the RSI exceeds 80, suggesting an overbought scenario, we will consider a short position, but given the slight upward forecast, this is less probable. This combined strategy, prioritizing the forecast and incorporating RSI signals, offers a balanced approach to capitalize on potential upward movements while mitigating risks with well-defined stop-loss levels. Based on the historical data and forecast, dYdX has shown volatility with a recent dip towards the support level of $0.553. The RSI consistently dips below 50, indicating potential oversold conditions. The Bollinger Bands show that the price has been fluctuating within a range, recently touching the lower band. Considering these factors, I recommend a moderately bullish strategy focused on capitalizing on potential rebounds. We will implement a strategy based on RSI with an oversold level of 20 and an overbought level of 80. My recommended strategy is to enter a long position at $0.569, coinciding with the first day of the forecast. The stop-loss should be set slightly below the support level at $0.54 to protect against further downside. The initial target price will be $0.585, aligning with the upper end of the recent Bollinger Band range and a conservative estimate of a rebound. If the price breaks through $0.585, we can adjust the target price to $0.618, the recent resistance level. This strategy combines RSI signals, Bollinger Band analysis, and support/resistance levels to maximize potential returns while managing risk. The portfolio will prioritize this strategy due to its clear entry, stop-loss, and target price points, and its alignment with the current market conditions. Based on the historical data and forecast, Conflux exhibits an overall upward trend. The price has been fluctuating within a range between the support price of $0.198 and the resistance price of $0.252. The RSI values have been mostly above 50, indicating bullish momentum, although recently dipping below 65. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a pullback or a continuation of the upward trend if it breaks above $0.242. Considering these factors, I recommend a long position strategy. My strategy is to enter a long position at $0.216, coinciding with the forecast price on August 8, 2025. A stop-loss should be placed at $0.198, the support price, to limit potential losses. The initial target price is $0.242, aligning with the forecast price and the upper Bollinger Band. If the price continues to rise, a second target price of $0.252, the resistance price, can be set for further gains. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, DeXe shows a clear upward trend. The price has been consistently testing the support level of $7.49, and the RSI has fluctuated between oversold, 35.3, and overbought, 62.0, levels, indicating potential buying opportunities. The Bollinger Bands have been widening, suggesting increased volatility and potential for significant price movements. The forecast for the next week projects a continued upward trajectory, with prices reaching $8.55. Therefore, I recommend a long position strategy focusing on capitalizing on the upward momentum. My recommended strategy is to enter a long position at $7.77. Given the RSI is currently at 51.4, we are not in an overbought or oversold territory. We should set a stop loss at $7.49, just below the established support level, to mitigate potential losses. The initial target price is $8.33, aligning with the forecast and the upper Bollinger Band. If the price reaches $8.33, we should consider taking partial profits and adjusting the stop loss to protect gains. For a more aggressive approach, we can set a secondary target at $8.55, based on the latest forecast, but this carries higher risk. This strategy combines technical indicators with price forecasts to maximize potential returns while managing risk effectively.